Hello, hello. I hope that you guys are having a terrific Wednesday. Can you believe that we are in Wednesday? Oh my goodness. I am super excited that we've made it to Wednesday and we haven't crashed and burned yet, right? So I just want to jump on here just a minute. I am going to make sure that all of my live stream links are running here because we have JJ, the CPA, that's going to be coming on and talking to us a little bit about taxes. Oh my gosh, we have tax season coming up. And how many of us in the room enjoy paying taxes? Exactly. Nobody does, right? So we're going to talk about that a little bit today. I'm excited to do that, but I wanted to say hello to you. I wanted to let some people sign on here a minute before he comes on, and I want to talk about taxes today and what that looks like. So let me get JJ in the room and let's see what we got going on here. I am super excited that he is going to come on here and grace us with his presence today. I totally enjoy him. So let me make sure that he's getting on. Right, Wanda. Me neither. Me neither. Let me make sure JJ is getting on and let's see what we got going on here today. So is JJ in? Is he? There he is. Oh my gosh, he is in. I'm sorry, I just saw you, JJ.
Well,
Can
I
you
can't
hear?
see you. Good morning. How are you doing today?
I might want to turn on my camera, right? So I'm glad you had sense enough to say that. I think I was talking to the people and they're like, I hear her, but I don't see her. So look over my numbers back here. I've been working with clients this morning. It's been a very busy morning, and I'm just excited that you have come on here to talk to us a little bit about the one thing we all dread, I think, is tax season. I get tickled when I talk to you, though, because you're so relaxed and you're like, oh, it's no big deal. We can do this, we can do that. And I'm like, I'm glad you've got it under control because I think I'm like most Americans to where it's so overwhelming that it's like, just take it. Just,
Yeah.
push it off on some CPA. Whether they do it right or wrong, we have no idea. The fact is that we've done it. We've done our duty to file the taxes and pay them. God forbid that we have to. So, welcome to this channel. I don't think that you and I have done a live stream together, have we?
Yeah, not alive. We recorded a podcast. Of course, you invited me down to your conference in Orlando, and you've invited me to come back to your upcoming conference later this year. And then, of course, you've got some wonderful private courses that you've been doing. So I've been a part of that. And then you and I have been able to consult some and kind of talk about your circumstances tax wise. And I have enjoyed that because I feel like I do bring relief to you when we've been chatting. But one of the big things that I really find that my grandfather told me, who was a CPA, my uncle was a CPA, I'm a CPA, so I'm third generation CPA. My son has joined the practice, so he'll be fourth generation. This is the 71st tax season that our family has been doing taxes for those here in America, which is more to say, yeah, it's in our DNA. But my grandfather told me that really what you're looking for with a tax advisor is somebody that is going to put you at ease by asking lots of questions about your circumstances because they really can't give the right answer unless they really know who you are. And I don't mean that they have to sit and figure out what your hobbies are, but you had posed some tax questions to me, and the first thing I did was ask a number of questions of you. And so what I thought might be good for us to chat about this morning is what would be maybe some of the questions that you should be hearing from your tax advisor. And then here's really a secret. Don't get upset that your tax advisor isn't asking you these questions. Ask to sit down with them, have a meeting with them. So many times we have people come to us, they've hired us, and what we hear is, Well, I don't hear from my person. And I said, well, when's the last time you heard from your dentist? Does your dentist checking on you to floss your teeth? Are they making sure you threw your toothbrush away and you're using the latest version? No. And so you have to be more interested in your own teeth than your dentist, the way you want to be more interested in your taxes. And so the more that you're interested, the more that you interact with your tax professional, the more calm you get, because we don't need our clients to understand what code section 162 means. But what we want them to understand is, well, when do I get to write something off? And so, if you don't mind, one of the things that you are supporting is some of the seminars that I've put on. We've got a boot camp coming up.
Right.
And I don't know if you've been able to put a link in the body of the video, but we've got a boot camp coming up. And people will be able to get 50% off listening to you, your channel, your followers. And with that, we've got it set that we will be doing this on a Saturday, March 8th. And here's the great thing, Christy, is that the second somebody signs up, they will get the more than 300 pages of tax materials that I will present at this seminar. Now, the easiest way to get there would be www.jjthecpa.com. I've given you a link directly to the boot camp sign up, and kick KICK 50, that's 50. So kick 50 gives them 50% off. That 50% off will be good through the end of February. So people need to sign up before then. But again, I'm going to present 300 pages, and it being a workshop, we're going to include some Q&A. One of the things I love about what you do, Christy, with your followers is you open it up to questions, and then you're really hearing what people are interested in. But with that, because I could just take up, I'm a fellow YouTuber myself, my channel, JJ the CPA. You obviously have triple the subscribers I do, but I have one of those buttons in the back, as they used to say. My kids, when I first told them I was doing a YouTube channel, they were like, okay, Dad. But then as
Yep.
they saw the subscribers and hit the 100,000 mark, you hit it long ago. But anyways, I'm part of that club, and with that, I love the collaboration that we have. But what
Yeah.
would you say some of the main questions you're getting? And I also don't mind sharing what people should be hearing from their tax pro, or what questions to take to their tax professional.
Well, it depends. Personal and business are two totally different facets, I feel like, that you guys deal with. But in my business, the problem has been the write-offs. I don't know what I can and cannot write off. And back when I was doing the welding inspections, I had to buy, fire retardant clothing. I had to have tools for inspection. I was on the road all the time, so I had the hotel fees and all this stuff. And while I was paying attention to keeping receipts, it didn't once occur to me that I would ever be audited, and I was, and it threw me for a loop. And they ended up taking me for $37,000.
Mm,
That
mm,
my CPA at that time literally took a step back and acted like
mm.
he had never worked with me before.
Wow.
And so he left me standing, and his whole practice shut down. So I have
Oh.
a feeling that he was doing everybody dirty
Mm,
somehow.
mm.
But I got in a real mess of angering, um, just the thought that they could even do this to me.
Yeah.
And the IRS is not at your beck and call, you're at theirs. So
Right.
it's like when they say, hey, you've got to show us your receipts. I'm like putting all of my receipts in a box and mailing them there, right? Because it's a mail-in audit. They mailed them back to me, and they said, no, we need this organized. And I'm like, organized? What does that even mean? So, yeah, I went ahead and had to pay the fee because they weren't going to sit down. They wouldn't sit down with me in my local office. So I was literally out the money.
Mm.
And to have a tax professional like yourself now that's showing me the ins and outs of how to keep all of that organized is like, I don't know what you charge, but the fact is that to save $37,000, I would have paid pretty good money to get
Right,
somebody to sit down and work that out for me, you know?
right, right.
So when you ask about the tax questions, the basic ones I feel like everybody wants to know is, can I write off the office space in my home? I was told by one CPA that if you write off office space in your home, it's a red flag to the IRS. Is that true?
Absolutely not. I don't know who got scorched earth over a home office that it's still this urban legend. And, there's some multi-level marketing companies out there that aren't really even around anymore. And they really took advantage of that and used it as a selling tool to get people to sign up to do this home-based business. But Christy, that was in the late 80s. And so literally like 40 years ago, 30 years ago, and here's now the deal. The IRS has a limit on it. And one of the reasons they put a limit on it is that I think they basically said, listen, here's what we think is reasonable. Anything above that probably is not reasonable, not even possible. And then here's the deal. Most home offices, the deduction is around $700 to $800. Now, somebody could say, mine's bigger. Well, you're probably not doing it right because it doesn't matter how big your house is, how small your house is. You're taking the square footage of the house that you're using for business. And what I tell clients is this, the second something doesn't smell right to you, it's probably not. And what I mean by that is you don't get to write off a portion of your house where you wink, wink, check email. And so what I also tell my clients, something I learned from my grandfather, is that if a client has to smirk in their answer, then you already know it's not real. And so the key here is that when we're taking advantage of anything with the IRS, it needs to be real. How do we know it's real? Well, I'm going to have a little fun with an impression, but if somebody's like, well, I check my email on the couch every morning, how's that a real deduction? I mean, how is that a real deduction? Because a real deduction is this. Yeah, I had to spend, $100 to travel to that client. I wouldn't have spent that $100 on that, hotel if it wasn't for going to that client. Someone going, well, I'm with my family and I looked at some property. Can I write it off? It's like, how is that a real deduction, right? I mean, so you already know that is a fallacy deduction, right? Now, somebody may say, well, but I heard that if I have a receipt and I go, it's like, then I say, well, where did you hear this? Did the heavens open up and there was a big voice that said, you can do this? Because there's no such thing as I heard. That means you made it up. And here's what I'm getting at. There's a form 8829 with instructions about this thick that talk about it. But guess what? In my boot camp, I cover that in detail. And there's 3 methods to go about it. And in 33 tax seasons, not one time have I had a client, even in audit, question about the home office. And I'll tell you, there's a simplified method. It's $5 a square foot, no more than 300 square feet. But I want you to think 300 square feet would be a huge home office. I mean, huge. Most spare bedrooms are 12 by 12, right? Point is, if you do a simplified method, there's a max of 1,500. You can do a direct or an indirect, but it's not a flag in any way, shape, or form. And then here's what I tell people. So do we take deductions only if it's not a flag? Because technically every deduction you take, we could then consider a flag. But here's the other part. When the IRS would come and audit and it's an $800 deduction, what happens if they say, you know what, we don't believe you. We don't think you have a home office. So we're not going to give you that $800 deduction. So most likely someone's paid self-employment taxes of 15% on their net Schedule C. That's where that's deducted. And then let's say that they're in the 20% tax bracket. So that's 35%. Oh my gosh, I'm going to owe $300. Oh my, I mean, the world's coming to an end. They're going to put me in jail. They're going to take my house and my kids. I'm going to be on the front page because I'm going to owe $300. Oh my gosh. I mean, why would the IRS even care about denying your home office to collect $300? Oh, but there's penalties and interest. Oh my gosh, I might owe $360. So see how interacting with the tax professional, and that's where we have fun, is we don't take a deduction whether we think it's a flag or not. We take a deduction because it's allowed. But then anytime I have a client that's like, gosh, are you sure we can do that? I'm like, well, why are you so unsure? Because now you're making me unsure. My grandfather said, when you're dealing with a tax professional, you get to ask those questions. So instead of saying, I heard, or on TikTok, all of those things, it's like, yeah, there's great ideas on TikTok. There's great ideas on YouTube. But now you have a tax professional to ask them, am I able to write this off? And so, anyways, this is why I would say, okay, so let's say it's a flag. How much sleep are you going to lose if you do get denied and you have to write a check for $360? Oh my gosh. Like, so here's my point. Why are people worried about it? Because they've heard. Why are people worried about it? Because they don't have a tax professional. And Christy, when I hear that, because I travel around the nation talking to thousands of fellow CPAs and small business owners, and then the seminars that I've done, is really this. That actually means you have a lazy, ignorant, doesn't know what they're doing tax professional. Literally, I would hate to say it, but they're literally, when it comes to the tax law, if I can use this word, they are not smart. They literally don't know what they're doing, because if you know what you're doing, it's not a flag, you know how to do it correctly, and it hasn't been a issue with the IRS since the 80s, you literally don't know what you're doing. You literally do not know what you're doing if you say that. And I'd
Yeah.
challenge anybody that says it's a flag, because I'd say, where's the statistics? You know how many home offices were probably audited last year? If I had to take a guess, 8. I bet 8 home offices were audited last year.
Wow.
8, as in 1, 2, 3, 4, 5, 6, 7, 8. And you know who it probably was? Somebody that showed a $250,000 loss on their business with zero income, and they're probably a drug dealer.
Okay.
I'm just saying, that's probably a flag, right? I have a $250,000 loss. I have a $6,000 home office deduction. So when we read court cases, that's what's getting audited.
Right.
Ridiculousness, right? No one has $6,000 home office, not even possible when you
Right.
even do the calculation. Let me ask you this, Christy, because one of the other questions that you seem to get is interest deductible? What kind of interest is deductible? And you talk about HELOC and all that stuff. So let's have a little fun together. You've got your board up, okay? And I actually have a friend, somebody I consult with. They're up in, they're not in my state, but I told them I would be talking to you soon.
Okay.
So he has a business, okay, that has a $150,000 line of credit that he has used up. Okay.
Okay.
And he has an SBA loan in his business of about 150,000. So he's got line of credit and the SBA loan, both of them right here. Now, normally he would charge on his credit card and be able to pay it every month, but they've opened a second location and cash flow's not there where he feels like he gets to pay it off every month, right? So he's now incurring a lot of interest on his business credit card, but he doesn't owe any money on his house. And so he was wondering, is it a smart idea? Should I borrow money on my house, or should I just go get another business loan? And he does have a way to bring in some extra revenue by increasing his prices. And so I said, well, I'm going to talk with probably literally the foremost expert in kind of dissecting something like this. But if somebody has equity in their house and they probably could use it, for business purposes, an equity loan, whatever. I've just thrown a little bit of basics there. But then one of the questions he asked is, but if I borrowed on my house, can I write off the interest? How would I go about this? So I know we're live, but what would be your advice to them? And then that helps me kind of know how would we be able to potentially write this off. So not you thinking about the write-off, but what would be your suggestion for somebody that has this little simple scenario? I mean, there's more complex issues here, but I simplified it here. Any thoughts for them?
The first thought that comes to my mind is the SBA is a government loan, basically, and they are screwing people over so bad it's not even funny. So whatever I'd say, he has like a 3% up to an 8% interest rate on that
Eight.
SB. Okay,
Yeah,
eight.
it's eight.
Okay, all right. So yeah. Okay, so without using language, it's pretty bad because just like a mortgage, they're charging him that interest. It's on an amortization schedule, so he's probably going to be in that for 30 years at
Yep,
least.
absolutely.
Okay, so the idea would be to take the line of credit and start chunking down the SBA. Now, unless he has great cash flow, and you just said they're at the minimum here, um, I wouldn't take the whole amount and move it into the line, even though you're going to be moving an 8% amortization into an 8% simple interest. So he's going to win from the get-go if he has the cash flow. His payment is probably very small on the SBA.
Right,
Again, it's
right,
not even meeting the interest, so that's
right.
why it's rolling out for 30 years, right? Okay, so the credit card you talked about that's at the limit as well, I would be interested in knowing what his payment is on that because I know that's higher than what his line of credit interest is going to be. So the idea would be that he would transfer the balance of the credit card into the lower interest line of credit to free him up some cash flow. Okay. That would be the idea. Now, once he starts making the additional revenue to come in, then he's really going to be making a difference on the SBA because he can start chunking that off. Now, something that I don't think that he probably understands is with that B lock, he could take, and let's say he brings in $10,000 a month in revenue, just saying. If he took the 10,000 and put it all into the B lock, and any savings that he would have anywhere, throw it into the B lock, then you're talking about doing major impact on debt elimination. Okay. So if he has, if he takes a $30,000 credit card, whatever it is, pays it off in the line. Now his payment's gone for the credit card. He now takes any revenue he gets in and hits it in the line. Then he pays his expenses out through the line. He has satisfied any payment that's due on the new line of credit. Okay. The point is now that he has the additional cash flow and he can start chunking on the principal amounts of the SBA, which is now going to reduce his balance to the point that he's actually reducing what they're charging in interest on him, and he's skipping over the schedule. So I just came off of a call with a guy, and he had a $251,000 mortgage, and it's at 7%. So we looked to see, because he had $36,000 in savings, and we looked to see what kind of interest savings is that if he took the 36,000, got a HELOC, let the money sit there, meaning that he put this 36,000 savings onto the principal of the home, so he's reduced it down. Now he comes over here to the line, and when he has that life event that Dave Ramsey has us prepare for by saving a whole year of income,
Mhm.
when that event never happens, because it usually doesn't, then you've got the line setting free over here for anything that were to happen. So the savings is now sitting in this mortgage or this loan that has worked down that principal balance. So how much interest do you think that this person saved by just doing that $36,000 chunk that he already had sitting in the bank doing nothing?
Yeah,
Okay.
yeah.
He saved $72,000 in interest and 5 years on his mortgage.
Wow.
Now, if you can do that with a mortgage, guess what he can do to the SBA, because it's the same type of loan, right? So the idea would be just to help him to understand that transferring, a large interest line into a smaller interest line is automatically going to be a good idea. Now take every dime of revenue that he gets and hit the new line of credit, because you're going to pay very little interest on that line. Then when you get some cash flow really running, come over and start chunking onto that SBA. That to me, with a minimal cash flow right now, is the best case scenario, unless he moves into something like the Money Max or something like that to help him eliminate interest.
Okay. And yeah, thank you. That's great. So this is also somebody that is wanting to go to a third location and a fourth location, and so wants to franchise. So I wanted to ask one more question just as a follow-up on that. So BLOC, business line of credit, HELOC, home equity line
Right.
of credit. We know that a home equity line of credit is only able to be tax deductible. This is a two-part answer. If you're using it for the home you're in, meaning to enlarge it or improve it. Currently, you're not able to deduct a home equity line of credit interest just if it's for personal,
Right.
right? And you
Right.
know this, And with that being said, that law expires in about 10 and a half months, meaning January 1, 2026, we will begin to deduct again HELOCs, even on the personal, because the tax law that's precluded us, that doesn't allow us to deduct it, that tax law expires 12/31/25. So yippee, we'll be able to deduct that interest, not to mention we'll be able to deduct up to $1 million of mortgage related interest. All that to be said, what is your thought though? So he has all the business loans, he has a business line of credit. So taking a HELOC, home equity line of credit.
Mhm.
So for me, the way that he would be able to deduct this is he would borrow that money, but then put it directly to the business. Like the bank writes a check and it goes directly in the business account, right?
Mhm.
Now, it would be fine if it popped down to the individual and up to the business, but then we'd have to have a loan between the business and the individual, and then the loan from the HELOC to the individual. But if the HELOC goes directly here, and the bank will always let them, but they are on the HELOC as in they are the borrower, and the business is also listed as a borrower, not guarantee, but a
Right.
co-borrower, right? And the bank's never going to say, nope, we don't want that, because it's giving them another name, right?
Right.
Only to say, now when that's being used for business purpose, and it could be the same as if this was going into real estate or real estate investments or into this person's business, right? So then the HELOC is not for personal use, it's for business, and therefore it's a write-off. So in this person's circumstances, clarify for me, when would it make sense to actually get a HELOC, using a personal asset on their house to then put into the business? Because, we talked about the BLOC, and he's got the credit card and he's got the SBA, but I heard you say the HELOC, but when would it be the advantage for him to use that? Maybe you said it and I kind of missed it because you're the master on this, right?
Oh.
So help me know on the HELOC. Where do you see that fitting in?
And the way I feel about it, it appears to me that the HELOC is not needed in this.
Okay.
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 Only because one, you don't want to load your personal property up
Yep.
with debt that's not, like you said, related to something, especially that you
Yeah.
can't pay off quickly.
Right.
Okay.
Right.
All right. So the B lock is always going to have a lower interest rate than a HELOC
Yeah.
in my experience.
Yeah.
So there's a couple of reasons why I don't think that it would be a good idea to do the HELOC. Now, if he had personal stuff that he was going to be working on, if he's an S corp, I guess, and he pays himself a certain check, and that's going to be going in to work off some other debt. I
Right.
mean, all of that would play into if I
Yeah.
saw a scenario. But
Yeah.
just based on what you told me, a $150,000 B lock, that's a pretty good chunk to work with. Now,
Yeah.
all of that being said, if he moved into a first lien HELOC and the numbers worked out, he paid off the mortgage and now his mortgage payments cash flow. That's where you're getting into something that you might say, okay, he's going to gain his mortgage payment that he's making now, turning it into cash flow. Now, according to his cash flow, he's going to be out of his home loan in 7 years, which that's basically the time that we look at. Then the monies are also somehow being transferred into the business checking that's helping to work down this over here. That is good because once his home is paying off, he doesn't have that debt or responsibility anymore, then he can transfer money from the HELOC into the business to start chunking off other debt. But the scenario you gave me just based on the
Yeah.
business
Right.
side,
Right.
it looks like he has plenty to work with
Yeah.
to start working the debt down.
Yeah, yeah. Well, I thought that's what you said, but I wanted to make sure I didn't miss if you were saying the HELOC might make sense. So, real quick on that, if he's going to open a third and fourth location, the
Mhm.
bank said we kind of feel like you're tapped out, right? With the kind of business that you're expanding. Now they said, hey, we could go and get you another SBA loan, but he
Yeah.
was like, do I really want to do that? Given it's a 30-year, does it make sense just to go into, more debt? Now, obviously, when you're opening a third and fourth location, there's going to be investment required, right? So obviously, that's not typically coming out of somebody's pocket. But then that's when he said, would it make sense to do a HELOC then? Meaning, now here's the simple scenario. It is a startup cost, meaning it's not something that would be able to be paid off within a year typically,
Right.
only because, let's just say it's a $500,000, right? And with that, if he has the simple scenario, if he has an option for an SBA 30-year, 8.5 or 9% probably now, or a HELOC, line of credit in the business, not an option because he's already maxed out based on, him, so to speak.
Right.
What would be your pick there? Any thoughts on that?
So is he going to be purchasing a new office building that he's
Yeah.
using? Okay.
He's going to do a build out. Yeah.
Okay.
It's a retail store. So yeah, there'll be a build out. That's where most of that cost is going to, and then equipment.
Okay. So I have a lender that will do a line of credit based on the commercial like that. So if he's going to need money to purchase and then the value's more than he's actually going to pay for it. So right there, you've put everything into one. You don't have a mortgage on the property, you have a line. Now you have the equity available to do your startup cost. That would be the ideal on that side, I believe.
Okay.
Now, if worst case scenario, if he just cannot get to the line of credit on the building, which it ought to be fine if it's, if it's a value. But he could take the HELOC right there. out on his property just to use. Do you have an idea about where he's at on that mortgage? Like, how his balance is compared to his value? Do you know
You're
anything
talking
like
about
that?
on his home?
Uh-huh.
I think it's paid off. I
Oh,
don't think he has any debt on his home. If I would say this, I've known him a while. If he does, it's going to be small. I think he'd have a lot of equity sitting there.
okay. So he's in Oklahoma?
No, he's up in the Northwest.
Okay. So most states are 90% loan to value. So
Okay.
if he has,
He's in Washington State.
okay, so yeah, Washington State, I believe they're at 90%, 80% at least. So he could take the value times 80 or 90%, kind of have an idea, and then just see if that's what he needs or he feels he needs to do the startup cost for the business. As long as, like you taught me just the other day, as long as that income he's bringing off of the new section of business he's got comes into the business checking first and then transfers to the personal checking, he can put it right back in the HELOC to pay that back down.
Okay, gotcha. Yeah.
I mean, you've helped me so much with that. I can't tell you how many times I've been asked that since you told me that. Because a lot of people do not understand about mixing business
Right.
and personal, because we've been talking about, commingling now for
Right.
decades.
Yeah.
So you really made that clear.
Yeah.
Did that kind of make sense? Did
Yeah, it
I?
does. Yeah. And I will be sure to send him a link to our live, and I think he'll be tickled pink
Okay.
that we got to chat about it. Kind of related to that, this is, when we were talking originally, we are now talking through what should be some of the questions you're asking of your tax advisor. And what Christy and I are doing right now would be one of the things when you're really trying to plan is to have your tax advisor in contact with your other advisors. And, a lot of times somebody misinterprets that. It's that you want to be involved in it. They need to be familiar with each other, because there are times where if Christy and I were now working with this person together, I'm going to now probably a little bit more understand what this client's trying to do if I'm able to hear it directly from Christy, from the other advisor, or at least a summary of it, or at least if I have a question, I'd be able to follow up. So a lot of times people have advisors, but it's just one direction. So if they're here, they've got an advisor on their finances, they've got an advisor, you. They've got someone helping them with banking and legal and insurance and car insurance and all these things. And then someone doing their taxes and someone doing their bookkeeping. But now all of a sudden you have all these lines of communication. So what we typically try to do is know who these advisors are, so that when we see something come across the table like this, we say, hey, well, what are your thoughts on this? And so my point in saying that is some of the questions to ask of your tax advisor is, are you open to just having communication with my other advisors? And it shouldn't be, if somebody says, well, yeah, I'm going to need to charge you. It's like, not, I mean, and don't get me wrong, that's okay. Yeah, if your advisor's having a 30-minute meeting with your other advisor, absolutely. But most advisors, it's a 2-3 minute conversation. Like when I'm talking with my clients' other advisors, I mean, it's 30 seconds, it's a minute, it's a clarification. We're not talking through concepts that I'm like, what are you talking about, Lance? I have no idea what a 401k is. My point is having that interaction. And then just like with this, because some of what you're saying, it's like someone takes that and runs with it. They're like, oh, that's awesome. I mean, it's a great idea. And then they execute it. And then it comes tax time and they're like, oh, well, you needed to just have moved the money this way. Nah, we're not going to be able to deduct it. So instead of somebody trying to think of every question, saying, hey, are you open to visit with our advisors? And any good advisor understands my advice is 10 times more valuable if I can have 1 minute discussion with you, or just a question that I can clarify with you. The other thing is, if you find an advisor capping on, as in making fun of your other advisors, okay, maybe that advisor that they're making fun of is, doesn't know what they're talking about. But here's the true sign. if they're going to make fun of one of your advisors, but they won't interact with that advisor, that actually is secret code that your tax professional doesn't know what they're talking about.
Right.
Meaning, don't get me wrong, I may have some advisor telling my client something, and I'm like, wow, that sounds ridiculous. But guess what is most of the time? My client misunderstood what they heard from that advisor. It doesn't mean that advisor is an idiot. Now, don't get me wrong, there's been a couple of times I'm like, I don't know if I trust your advisor, but it's like because I think they're a shuckster. Like I don't think they're of value or integrity, right? My point is if you have tax advisors, we are a weird breed. We have weird personalities and we don't like necessarily interacting with people. Now, I'm quite different from all of that.
Yeah.
But my point is that when somebody's hearing, and the reason I say that, Christy, is that with some of the things that you talk about at your conference and you talk about on your channel, and with Money Max, right? These are concepts that are genius, but some ways they're so genius that to somebody like me, if I'm hearing it from my client, I'm not hearing it from you. I'm not hearing it from, whoever their advisor is at some of these companies that you work alongside of. It may make no sense to me, but me as an advisor, be like, okay, my client may not fully understand what they just were told to do, not because my client doesn't understand, but the client's not that expert. They're not my expert. The client's not supposed to be an expert. So I will just tell you this, with some of the concepts that you're dealing with, I guarantee when they take it back to their advisors, they're probably like, oh, I don't know that you should do that. That doesn't make sense, blah, blah. But if they won't listen to what you have to say, they won't watch that specific video where you talked about it, or something that you've done or the advisors that you're working with, that's kind of a sure sign. Because what did I say in the beginning? You've got to have an advisor that's going to ask you, a lot of questions. Now, one of the things that you talked about, and I don't know how much time we have, but one of the things that you had talked about is how do we know what's a deduction? So if it's okay, I'm going to plug again, since you have such a wonderful audience, and I know that you and I have known each other for a long time, so you don't mind. But I do have this ultimate boot camp coming up. And even if somebody's watching this later, the link that, if it's still up.
I put it in the chat.
Okay.
Okay.
So even if you're watching this after March 8th, I'm having live workshops all the time and seminars, and nothing to compete with what Christy does. It's working alongside. It's really coming from a tax angle. And that workshop's really meant for the person that might have an advisor, but they don't interact with them a lot, or they don't want to spend the money, but in a workshop, they may get a lot of value, or somebody that's doing it on their own, or a new advisor. So this is not meant to be high level. It's meant to be really kind of explaining it. Now, to be clear, I'm not going to sit and go, okay, on line 1, put this down. Everybody done that? Okay. Now go to line 3 and line 4. Why? Because that's what your software does. But talking through concepts, and one of those is, what is the deduction? And so I know you might have other people that you want to bring on the live or whatever. So I'll excuse myself as soon as you tell me to. But here's really how it works with a business deduction. And believe it or not, there's nowhere in the law that says anything specifically about any real deduction other than clothing. But what it indicates is there's a code section 162, and no one should fall asleep right now because I talked about this at your conference. There's 2 requirements for there to be a deduction. And most people, when I say it, they go, well, I don't understand what that means. But here's what it says, that the expense must be ordinary and necessary to your business, and your intent is for business purpose. So I go to the second item first. And when I'm talking with a client and we're trying to figure out if something's a write-off, so to speak, it's like, well, would you spend that money if you didn't have a business? And they're like, well, what do you mean? I'm like, well, would you have bought that if you didn't have this business? And they may go, I don't understand the question. I say, okay, listen, would you have gone to the store, pulled out your wallet, swiped your credit card, or been online and bought that if you didn't have a business? And even if they're still confused, I'd just then say, did you buy that for yourself? Did you buy it for personal? Are you using it for business? Yes. Then your intent was for business, and you just met now 50% of the requirement for something to be a deduction. Now, let me give you an example. I have a client, now this was back in the very beginning, but I had a client, they had a baby. Went and bought a teddy bear down in the gift shop, brought it up. Now, some people could say, well, you're a terrible human being. I cannot believe that you bought a teddy bear for $20 and you think it's going to write off and you're going to get audited and you're going straight to jail. I cannot believe you just wrote off a teddy bear. You are the worst person I've ever heard of in my entire life. Okay. Well, first of all, the only way I know this person is because they're a client. I wouldn't have bought that teddy bear if they weren't a client. I wouldn't have gone to the hospital if they weren't a client. Doesn't matter that it was for a baby and it's a personal issue, but I bought a teddy bear. I brought it up. I'm writing it off. Okay. And why? Because of what I just said. I'm a terrible human being. I'm having fun. But my intent was for business because Andy, having his baby, he was somebody that referred a lot of business to me. And I wanted to show my thankfulness. It's okay that I can be a nice person and be generous at the same time of getting a write-off. There's nothing in the law that says, whoa, whoa, whoa. If you walk into a hospital and it has something to do with the baby and they're in a maternity ward and you might smile when you do it, you don't get to write it off. It doesn't say that. And then here's the other part. People are like, oh, you're going to get audited. That's a flag. There's nowhere on the tax return where you write teddy bear for a person in hospital. It's called professional gifts or promotional expense. The IRS doesn't know what that is. Now, it doesn't mean we get to just write off whatever we want, but somebody that says it's a flag is a true sign that they are ignorant. They literally don't know what they're talking about. They literally do not know anything about taxes if they say that's a flag, because first of all, you're not providing that detail. Second, okay, so let's say it's a flag. You file that return the next day, there is a SWAT team at your front door because you wrote off a $20 teddy bear expense. Okay. They're coming for you, right?
Yeah.
They've already emptied your bank account. I would say, okay, so let's hold on for a second. So let's just say that you are getting audited. You present the receipt, you explain why you bought it, and they go, sorry, we're not doing it. Okay. Not doing it. Okay. So I need to write a check for how much? $6? $6. I mean, the other part is it only saved me $6 in tax. So why is anybody saying it's a flag? Why is anybody losing their mind over this? It saves $6. It's the same thing to go, so why write off something that's not a real expense if it's only going to save you $6? I get it, it's $6 and $6. But when I talk with a client and they're now wanting to write off something that I would say that's a dumb move. Like, how are you able to write that off? And here's an example. I'm buying a boat. It's $250,000 boat, and I'm going to take clients out on it. So I want to write it off. I'm going to put my name on the side. Okay. So I got a question for you. Are you going to rent it out? Yes. Will you have a captain that will actually drive that boat? Yes. How often will it be rented out? Could be rented out every day of the year. Okay. How often are you going to use it? I don't know, a handful of times. You can take your family on it? Yeah. Okay. Well, maybe you can't write off 100% of this, but I don't know how you couldn't write off 99% of it because you actually now are generating revenue. You have expense. This is a business. But most advisors would say, nope, you can't write off a boat. No, that's a flag. You're going to jail. You cannot write off a boat. But if you don't ask some questions, now, plenty of clients, when they've said, well, I'm going to take some clients out on it, I'm going to put my sign on the side. I say, well, here's the first thing. The money that you're going to spend to put that sticker or that little tiny logo on your boat, yeah, you can write that off. That $48, that $150 cost to put it on your boat. Okay, that's fine. Just the same as if you were putting it on a street sign or in front of your building. Okay. But you don't get to write off a boat because you take clients on it. And why would that be? Because the next question I'd say is like, oh, were you buying the boat just to take clients out on? Well, no. See how they're already smirking? Are you going to take your family? Yeah. Well, how many times are you going to take clients out? I don't know. How many times do I need to take clients out to make it a write-off? My point is your intent is not to get the boat for business purpose. And that's why it's not a write-off. It doesn't mean anything about anything else, right? So now when you have somebody on TikTok, I pick on TikTok because I don't hear this same advice on YouTube. But there's some people on TikTok that would tell you how that's a write-off, but they probably would be telling you how it would be a business. So if somebody's listening to TikTok and they're like, oh, I heard on TikTok that if I do this, and I do this, and I do this, I can write it off. And this is where TikTok advice never works. Because what the law says, if you're only doing something to save tax, then it's not allowed. Why is that? Because your intent wasn't for business. My intent was to save tax. You see how intent is the biggest thing? And so when I'm talking with clients, I'm like, I don't know what your intent is, right? What was your intent in getting those flowers? What was your intent in paying your kid? Now, know this, of the clients I'm working with, if they're doing that, they're writing off, they have another 500, another $1 million in write-offs, right? And their kids either, they're doing something. That flower was either for their office. But if somebody says, well, I'm going to pay my kid off so I get the write-off, well, it's not a deduction. Why? Because I paid my kid? No, because you didn't do it for business purposes, right? You did it only to save tax. So see how the mindset is? And so when you look at tax court cases, the reason they lose is they're like, well, I don't know why I did it. My person just said I could. I heard it on TikTok and they said I could write it off. So I did. So if you don't know what you're doing, well, of course you're not going to get the write-off. My
Uh,
point is this. We shouldn't be scared of any deduction because if we know what is deductible and what's not, and you have intent, the other part being what's ordinary and necessary. Ordinary and necessary is I did it for business purpose, meaning this is going to help me make more money or it's going to be something that's going to help me save money. So ordinary necessary. Now, if you're talking to somebody like, well, I don't think you need an SUV to for your business, well, you need to fire that person because how do they know what you need for your business? The law doesn't say you must only drive a 15-year-old vehicle that is in desperate repair, that's got a rust job on it to consider it a legitimate write-off for a vehicle. You know, it doesn't say that anywhere in the law. So if you have a tax advisor that's now giving you their personal opinions on what they think is ordinary and necessary, probably somebody you need to let go because that's not at all anything we ever discuss with our clients. I have some clients that they're spending 850 on rent. I have some clients that are spending 15,000 a month on rent. Nowhere in the law does it say no, 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 no. Those offices are too luxurious. You don't get to write off that $15,000 in rent. Well, if they're seeing patients there, they're selling product out of there. Oh, it happens to be on the corner of Fifth Avenue in New York City. My point is, that's where the ignorance comes in. And typically that ignorance is you haven't been asked the right questions. You aren't asking the right questions. And then you should ask your advisor if they say no, just say, help me understand why it's no. Don't say, I heard on TikTok. Say, help me understand why it's no. Well, because it's a flag. Why is it a flag? Well, because I said so. Okay, well, this isn't 1950 and you're my dad or my mom. Why is it a flag? They probably then don't know. My point is, you don't take a deduction just because something's a flag. You take a deduction when it's a real deduction. So you should know as a business owner what's a business deduction. I spent it for business purpose, but if you're like, oh, I'm going to spend that for business purpose, it's not a write-off. And that's why I tell my
you
clients,
you should
stop
be a
smirking.
you should be a comedian. So we have a question here. Before I ask theirs, I had a thought. Um, so I do giveaways a lot. So I may give away tickets to the conferences. I may give away tickets to the webinars. I may give away cash prizes, which is what I usually do around Christmas. I was told by the CPA that I fired because I realized he's doing exactly what you're talking about here. Um, He told me I could not write off any donations that were over $250 when they were given to, a YouTuber that happens to be watching me. Somebody's watching me on YouTube. We have a giveaway, they get 250 or 500.
Mm.
He said I couldn't do that. So I literally have started to where if I do a giveaway, it'll be under 250,
Mm.
per person, I guess is what I got he was meaning. Tell me about that. Is that true that, when you're giving away money, you can't take it as a write-off?
So that's a total fallacy. That's not a write-off because you could give away $10 million. You could give away whatever you wanted. Okay. Now
Stay
here,
tuned. We're going to be giving away $10 million.
right. But here's why the IRS would allow it as a write-off. It's taxable to the recipient. There's nothing you can do about that. Like you can't call it anything. You could call it whatever you want. You could call it an angel gift. You could call it, anything you want. When somebody wins an award, I'm sorry, wins something of money, no matter what it is, it doesn't matter what it is. Oh, it was from my church and we had a baptism. And if I brought 10 people that were baptized, I was put into a drawing and then I was able to win some money or whatever. It doesn't matter what it is. It's taxable to that person. You can't do anything about that, Christy. You can't
Okay.
help it. Somebody that would say, well, Christy, you're telling me it's taxable. It's like, no, I mean, just saying it's the law. Now, it's not your job to tell that person that. But when we watch a TV show and they give a family a home, that family is paying tax on it. So typically that organization has to also give them money, which is also taxable to them. And that's why you can give away any dollar amount that you want. And actually what the law is that if somebody's getting something that's $25 or less, it's typically not taxable to them. It's considered de minimis. Now, it can't be, well, I gave them a $25 gift card and I gave them 1,000 of them. Like this isn't ridiculousness here. My point is that anything above 25 bucks, and really you could argue anything above 1 penny, but depending on what it is. My point is if you are giving out cash, you're not able to get away with it not being taxable to the recipient. And that's why it's a write-off to you, no matter what it is. Now, I will say this, you're required by the IRS, if it's $600 or more, you would have to send them a Form 1099, just a 1099 miscellaneous. That then kind of backs up your write-off. It wouldn't have to send a 1099 for you to get the write-off, but I'm just saying it's two separate things. So you would need their EIN or their Social Security number. You then have to have it. They have to file a Form W-9 to ensure there was no withholdings. Then you can send them the check. If it's under $600, you're not required to file or send a Form 1099. So you get to write off whatever dollar amount that is. Now, if you give away tickets to your conference, because you are cash basis, meaning that's just what we are as small businesses, you don't get to write that off because we only get to write off what cash we spent, right? So giving away a value, because we could then also take advantage and say, well, these tickets are $1 million each, and I'm going to gift you a $985,000 gift, and I want to write off $985,000. Well, the only way you could do that is you'd have to recognize the $1 million and then write off the $985,000 discount, which that doesn't, it still results in the same thing. My point is you can write that off to any amount. 600 or more. Before you would send the money, you would need them to fill out a Form W-9. Pretty simple and easy. And then you send them the check, and then in January you send them a 1099. And again, any dollar amount you'd be able to write off.
Okay, people. So for you guys who are watching this, please know I'm giving him real scenarios that I have dealt with my local CPA who I have since terminated because I kept getting that when I would try to sit down and have a conversation about, hey, I know that, we don't have a lot of YouTubers in this area. We don't have a lot of people that bring in significant income. So I know that you may not know what all I need just on what you do in a basic day with the people in this area. So, what do I need to be bringing to you so you can tell me what my write-offs are? So you can, because I have different write-offs compared to somebody who works at Food City, right? So the point is, every time I would go to have a conversation, it was, oh, yeah, yeah, I'll take care of that. Don't worry about that. I've got this. Well, okay, so did you, because I hear from other YouTubers, well, I take this deduction. So I go to him. Okay, they say I can take this. Well, I don't even know why they would say that. That's, you're not going to need that. And I'm like, okay, so he's the licensed CPA. They're YouTuber friends. So I find JJ and I'm like, JJ, you've got to look at my stuff because I'm getting mixed. I want to do it myself because it's like I can't mess up any more than he's getting ready to. So, I can't. That's why it's so important that you come on the channel and you talk to people and you let them know that you're having these boot camps and you let them know that you're giving out information because I want to show up at your boot camp. I need this information. I need somebody that cares enough that whether I'm going to pay $80,000 in taxes this year or if I'm going to pay $10,000 in taxes, because everything I don't have to pay the IRS, I can use to build my business, giveaways, whatever I want to do. I mean, doesn't that make common sense that we're trying to give the IRS the fair amount that we need to pay because we are making money? But I mean, people are mad at Donald Trump because he has a team of tax advisors who keep his taxes down. I'm not mad about that, of all things. I wish I had a team of tax advisors. So that's where you come in. And, you, like you said earlier, you are working in my own personal stuff here because I'm confused right now. I don't know what I can bring to you. I was literally not going to send you over the promotional giving or whatever you're going to name that because I do so many giveaways during the year. I had a couple teacher what were they called? Teacher appreciation dinners where we brought the whole school in,
Mm. Wow.
like to, Texas Roadhouse or something. And we just fed them, gave
Wow.
giveaways there. We're talking a
Wow.
couple of thousand went out to gifts there.
Wow.
And so I'm not looking for ways to get, paid back. But I mean, if I'm giving to people who need,
Yep.
and why not?
Yeah.
So I didn't realize that because I didn't even include the teacher appreciation in what I did, just to be honest with you.
Yeah.
So it's like I need to know this stuff because
Yeah.
I want to have more money to give more away, is the way I
Yeah.
look.
Yeah, yeah. Well, Mr. Beast gives away money all the time. It's all a write-off. And the reasoning behind that is that you've earned money in a business and now you're spending money in that business. And you're not writing it off as a charitable contribution because that can only go to a charitable organization. But in a business, that rule doesn't even apply. It doesn't matter if it's a charity or not. If you have business purpose behind it, you get to write it off. And the other part, like with I would say, wow, Christy, that was extremely generous and what great goodwill to do that. Well, every business out there does that, especially the large businesses, and they're doing it and they are 1,000,000% getting a write-off for it. Why? People, when you're looking at that something, you think, oh, well, you bought dinners and you're being nice. So gosh, Christy, I can't believe you'd want to write that off. It's like, well, it didn't change the fact that you were helping people, you wanted to help people. And what I even heard was you didn't even care if you got the write-off. Well, there's no more proof that's needed that that's a business deduction if you don't even care what the write-off is, meaning I did it and it's tied to you being a YouTuber, and a professional, an advisor, a consultant, all the other things that you do outside of the channel, it all ties into that. And so if it wasn't a write-off, you would not see big checks, right, by big corporations at the middle of the Super Bowl, giving away $1 million, to some organization. And everybody thinks, oh, it's because it's a charitable contribution. No, it's not. Because for businesses, you can call it charitable contribution. There's a line item for charitable contributions. But why would you call it a charitable contribution when it's a sponsorship? It is a deduction. And charities can receive sponsorships and it still be considered a contribution to them. And that's where there's a difference between ignorance and knowing. And the ignorant, usually they haven't read the law, they're emotional in their decision, they want to drive in their heels. And the reason they're doing that is because they literally don't know what they're talking about. Literally don't know what they're talking about. So I get some angry people that come to my seminars that are fellow CPAs or EAs and tax professionals. They're like, you're going to get your clients audited and you're going to do this. And I just start asking them questions. And I would then say, well, if my client had this, what do you think of that? What if my client had this? What if my client had this? And I start just telling them, and then they go, oh, okay. And that's why it's just like, and so there's been times I'm saying, I even tell some people, depending on their attitude, and it doesn't happen that often, Christy, but at least once a seminar, I said, really, what are you worried about? Because typically people get angry at something because they aren't aware of it. They're afraid of it because they're ignorant to it. So what can I do to help you get better educated on this? Because that's why I'm here, so that you're not angry about it. Because it doesn't make sense to me why somebody would be angry saying, you should not be able to write that off, taking all these teachers there. That's just like, that doesn't even make sense to me. How is that an angry issue? Now, I would say, well, Christy, did you pay through the business? Yes. Do you have a receipt? Yes. And I might say, so tell me more about this. I'm like, well, I mean, it sounds like your intent was for business. Let's write it off. And then guess what else? Let's just even say for a minute that cost you $10,000. So, Christy, that probably saved you about $3,700 in taxes. So let's just say that we're not able to make an argument to the IRS, which it would be shocking. Okay. But let's just say the IRS agent's like, nope, not going to let it happen. We're going to take you to court. So guess what happens? You're going to write a check to the IRS to give them back your tax savings of $3,700. Okay. Should I lose sleep over that? Should I now not do it? You know what I'm saying? My point is that that's all the IRS is going to do is just say, you owe us the savings that you took, you owe it to us now. Okay. Yes, there's penalties and interest. Oh, how much? 20%. Like, oh my gosh, so it's $600. All I'm getting at is it's not like we make the decision, but my point is when I put it in those terms, it's like, so what are we scared about? It saved you $3,700. You had business purpose. So if the client's still scared, then I'm like, you're just telling me it's not a write-off. Because why would we be scared if we have all these facts and circumstances? And then guess what else? On your tax return, it doesn't say, we went to Texas Roadhouse and there were teachers and we spent this much and here's the receipt. Only to say when people say it's a flag, you're literally telling everybody you have no idea what you're talking about. You're literally from planet Mars. You just landed here. You literally have no idea what you're talking about because the IRS looking at your tax return doesn't even know what you actually did at all. Anyways, so with that, actually, I've got a client Zoom, so I gotta jump off. But we were just having so much fun. Thanks for inviting me onto your live, and hopefully people will check out that Ultimate Tax Boot Camp or one of the upcoming workshops. Love that you're involved, and I sure appreciate all your kind words. And what I think we like about helping each other is that I feel like both of us, we do what we do because we do like helping people. And I'm going to say it, Christy, at our age, oh, I just said it, at our age,
I'm okay.
Right? Yeah, we don't really care about the views. We're not doing it for the clicks. Maybe if we were younger, Not saying we don't pay attention to that because it tells us if we're putting out good content. But usually when we're putting stuff out, especially when you get a little older, it's like, well, does this make sense to me? Is this of integrity? Is this going to help somebody? Because I think that's what you and I have in common is the first thing we're trying to do is like, how does this information help people? Versus when you hear somebody on TikTok or maybe even YouTube, and it's clear from the first 30 seconds, they're just wanting you to listen to their video for the sake of making the revenue. So if I'm watching a tax video and it's entertaining, it's probably a bunch of fluff because I don't need to be entertained with a bunch of pictures and distractions and laughing the whole time. Doesn't mean it's a bad thing if you enjoy those shows. All I'm saying is typically that's my signal. That's not a true tax professional that's
Right.
actually trying to provide good information. They're trying to provide a video that you'll watch and come back to so they can make the revenue. And again, there's nothing wrong with that because there are good CPAs on YouTube. They have very entertaining shows. Mine just aren't that way. I don't have cartoons and laughs and pictures flashing to keep you memorized. My show is like yours. My channel's like yours. I pull a whiteboard up sometimes. We're just talking through facts and circumstances. So with that, Christy, I sure appreciate you. You're just helping a lot of people. It's an honor to be on with you live.
Well, I absolutely love when I talk to you. You are so fun to talk to and so full of information. So thank you so much for joining us today. I'm going to sign off too, people, because I
Okay.
got a million and one things to do. I hope you guys have a great rest of your day. I have the link in the chat. You are welcome to join JJ and join me, I guess, at the boot camp. It's going to be a lot of fun and we're going to have a lot of information. So I'm excited about it.